U.S. natural gas inventories was smaller than expected, 63 billion cubic feet versus a forecast of 70. Joining us from Houston to talk about the latest inventory numbers, Tony Franjie, natural gas analyst at Genscape. Tony, any room for joy, reason for joy in these inventory numbers?
There just might be. Weather adjusted, the numbers are more bullish than expected in terms of the demand side. We're getting lower gas prices here over the last couple of weeks, and that's translating into more gas demand on the power generation side, unfortunately at the expense of coal demand. And it's also leading to production being basically flatline. It looks like production has peaked since it peaked around April of this year.
Wow.
At around 74 BCF a day, and production is sitting just a little bit under 72 BCF a day right now. Basically, we are actually forecasting production next year to be down compared to this year. In addition, we're going to see demand pick up quite a bit next year from industrial demand, which still picks up from petrochemical builds and more ammonia plants, and then from coal plant retirements for next year. So yes, there is some room for joy and bullishness for this number. However, we're coming into the winter, and so far the maps for November are very, very red, very warm. So we'll see from there.
America's natural gas production, you think, will actually go down next year?
Yeah, we feel that it's going to go down next year. We actually, Spring Rock Production, Genscape had actually called the peak in production around July or August of this year. We called that early in the year, and so far we've been right on, spot on with that. That's significantly different from what a lot of other people are forecasting. I would say what most people are forecasting and the market's forecasting in general. We feel that with a lot of it comes from these crude oil prices, from the associated gas production from crude oil is going to start to drop quite a bit. We do feel like the Northeast production will increase due to infrastructure improvements, but overall we estimate gas production to be down next year, mainly from crude oil and also just from natural gas prices being low as well.
Yeah, of course they produce nat gas as a side effect to oil production in many cases. We've got oil, as you know, it's been flirting with multi-year lows of $2. Where do you see the price going to next year?
Oil, I'm of the belief always that oil is not necessarily a fundamentally supply-demand driven commodity. It's more driven by what OPEC wants to do with it. Given the supply-demand backdrop, I mean, if Saudi wants, they can take the price up back to 100. All they got to do is just cut back on production enough to do it. So to me, the S&D balances. We feel crude oil production, at least in the U.S., is going to drop as well next year. But it may not matter if OPEC decides, we want to continue to punish U.S. and even Canadian producers, and we're going to keep the price low, and we're going to hurt everybody around it. So I think the two things really that, for me, when I look at crude oil, is going to be what does OPEC want to do, mainly Saudi Arabia, and what's going to happen with the currency with the U.S. dollar. A stronger U.S. dollar equals lower crude oil. So yeah. I would say for now in the short run, crude oil would go back down to the lowest. Probably I would say in the short run we would test the 30 handle once again on the WTI crude.
Yeah, I asked the question in a kind of rambling way. We've got your outlook on crude there. What about gas? Gas stuck around $2. Where do you see it next year, natural gas?
I see it moderately higher next year. Because we've got production down next year, and we've got demand up next year, adjusted for the weather, of course. We've got industrial demand increasing in the U.S. next year. Even with a moderate recession globally, it would still increase just because the U.S. being the low gas producer and just attractive. The chemical plants and the ammonia plants are going to come on no matter what at this point. And the U.S. is going to be exporting a little bit of gas, which should increase some more into the year after that. And also we have coal power plant retirements coming on next year that are going to have a bigger impact than what we see this year. And we already saw a pretty impressive impact in terms of the power demand from coal plant retirement. So the problem is the price of gas can't get too high. If it has too big of a rally, we easily get on a lot more production that takes the market back down, which we saw after February 2014. with that big run up in the cold winter.
We will have to leave it there.